This is by far the easiest way to trade the ICT silver bullet strategy. So first and first, you want to come to the indicator section here and search for an indicator called FVG. I recommend using this FVG by Nephew Sam. Click that and add that to your chart. So the reason why I want you to add this FVG to your chart is because it's going to help you plot out the most precise fair value gaps. In case you don't know what fair value gap is, I'll be making a video very soon. So in case that video is out, all you have to do is click on the card at the top of this video to see how I explain in depth what an FVG is. But in case you don't know what an FVG is, all you have to do is add this indicator to your chart. Alright, so let me quickly show you what a silver bullet strategy looks like to me. So number one is you have to come to this time zone here. You can see this time zone down here. Click on it and make sure your time zone is set to the New York time zone. So it's going to be UTC -4. Add that to your, once that is added, once that is set, all you have to do is come to this tools section here. It's called the vertical line. Click on that and make sure the vertical line is on 10 a.m. So this is 10 a.m. right here. And if you notice, I'm using the 5-minute time frame. I prefer to use the silver bullet strategy on the 5-minute time frame. You can use the 1 minute, the 3 minutes. It depends on what you actually want to use. But I personally prefer to use the fair value gap and the silver bullet strategy on the 5-minute time frame. Although there's a caveat, there's a catch to it, and if you want to learn exactly how I trade this strategy, all you have to do is to click the first link in the description of this video. Now plot your vertical line at 10 a.m. and 11 a.m. which is around here. And what you want to see is you want to look for the most recent manipulation in price. Well, not kind of like manipulation, I would call it a liquidity grab. And as you can clearly see, there's a strong momentum to the upside here. Price made a very little retracement, a very simple retracement, and let's plot that out. As you can see, price grabbed liquidity, which it did right around this point. And after the grab of liquidity to the upside, price came back down, and there was a change in character. There was a change in market structure right here. As you can see, this week gave us the confirmation of a change in character, and we want to look for an FVG. And in case I explain how to use this FVG and how to choose the right FVG when using this silver bullet strategy in my mentorship group. This mentorship group, I teach you, and not just only teaching you, you also get signals from me every single day, and you also get to join the community of like-minded traders. So it's a learn, earn, and commune mentorship group. So if you want to join that, click the first link in the description of this video. As you can see, we want to make sure that our entry, it is very important. We want to make sure that our entry is validated at this 10 a.m. to 11 a.m. New York time. So as you can clearly see, we got tagged in at 10 a.m. on the dot. 10 a.m. on the dot, we got tagged in. So, and the FVG, your stop loss should be, if you're being aggressive, your stop loss should be slightly below this candlestick itself that formed the FVG, which is this one right here. But in case you want to be very conservative, which is what I do, which is what I would recommend, I have two entries. One is aggressive and one is conservative. So that's how I like to do it. I'm giving that out to you guys for free. I do not usually share this. I use two entries. One is aggressive and one is conservative. I use the same risk, although like I said, there's a catch to it, and if you want to learn that, come join me in the mentorship session. So, as you can see, my stop loss is going to be slightly above this fair value gap candlestick, and my first take profit target will be at this grab of liquidity. Will be at this change in character, right? It doesn't really matter. You can just use a fixed number, let's say a 1 to 1, a 1 to 1.5. It depends. Like, it clearly depends on what you want to do. I have students who use this dynamically. There's no fixed perfect way to use this take profit system. Sometimes I have a fixed take profit depending on what I want to do, and it depends on what your preference actually is. So as you can clearly see, I usually recommend a 1 to 2 on this trade, or a 1 to 2.5, depending on what you want. It depends on what you're comfortable with, and if you want to be even more aggressive, you can take a 1 to 5 on this trade. And as you can see, if you had done that, you would have most likely lost this trade, because this trade went like, I think, 2 point something to 1 and then reversed. As you can see, it went for like a 2.47 to 1 and then clearly reversed all the way back and hit our stop loss. Alright, so if you had used the two entry system I taught you guys, then that will clearly mean that you had two trades running and one hits 2 to 1, which is what I recommend. As you can see, 2 to 1 here. And if you had used the other aggressive entry I told you guys about, then clearly this one would have gone for a 1 to 4. So in retrospect, clearly everything was like depending on the risk you're using. If you're using 1% risk right here, your trade went for a 2 to 1, which is a 2% gains, and right here it went for a 4%. So in total you made 6% on one single trade. If you check that in terms of profit and percentage gained, it means that you risked 2% on these two trades and you made 6%. You clearly made around 3R on just this one single trade. All right, so let me quickly show you one more example real quick so that you guys can get the gist of this silver bullet strategy. This is gold SAU USD on the 5-minute time frame. Like I recommend you use this strategy on the 5-minute time frame. And as you can clearly see, the most recent, right guys, the most recent grab of liquidity happened around this point. But there's a reason why I wouldn't use this. And let's say, for example, let's say you took this trade and it ended up losing. What I would usually recommend is look the other way. All right, so there's a two-way thing to this right now. As you can clearly see, price grab liquidity to the upside here, and there's also a liquidity down here as well. And clearly there's also a grab of liquidity down here. And as you can see, I only plot my 10 a.m. down here, and let me just plot the 11 a.m. which is here. So clearly means I'm looking for my trading action within this time. And there's a reason why I wouldn't take this this first trade, which is the first initial grab of liquidity to the upside. And this is usually reserved for my students in the mentorship session. All right, so clearly there's a complete violation of this fair value gap, which means there's a candlestick body close. I do not share this with the public. This is only for my students, but I'm giving you guys for free. Once there's a candlestick body close outside the fair value gap, which is right here, it's an invalid fair value gap. So clearly there is no more setup on this first grab of liquidity to the upside. So clearly I'm now looking at this lower grab of liquidity, which is the second grab of liquidity. And now I know you'll be wondering, this is the first fair value gap, so why didn't I use it? I didn't use this because this is not a valid fair value gap. For me, this is not a valid fair value gap. This, to me, like what I teach all my students in the mentorship group, is this is the most valid fair value gap. So once we see this fair value gap, and in case you're wondering what this indicator that paints my candlestick golden, which is yellow and blue, then you can send me a DM, send me a message. I will share that with you for absolutely free. This is my valid fair value gap, and I'll be taking my trade right here, and my stop loss will be, for the aggressive entry, my stop loss will be slightly below the candlestick that formed the FVG, and a 1 to 4 on this one trade. And let's see if that's a win. Yeah, that's a win. And our second entry would be a 1 to 2, slightly below. And let's see. So clearly you can see beautiful trades. We won both trades. So it's as easy as it looks, guys. If you guys can just replicate what I just showed you guys right here in depth, step by step, you can literally become a profitable trader.